Good morning, Mr. Tarun. Good morning. How are you doing? How are you doing? I hope you slept well and are freshened up to enjoy the show that we deserve. We deserve it, right? We deserve it. So I'm just messaging people on WhatsApp. All those people on WhatsApp slept for 12 hours. What? How could you manage to sleep for 12 hours? That means if you woke up at like 8, you must have slept at. No, if you woke up at 6, you must have slept at 6. That's just extraordinary. How could you do that? I'd like to know. I'm very interested in knowing the secret. Nice. Done. We are live. We've sent a message. Everything is sorted. Now let's begin. Oh, had a terrible headache. I'm sorry to hear that. I hope could you figure out why you had that headache? I am audible on LinkedIn. I'm audible on YouTube, of course. And now we are ready. I just hope your headache gets sorted, Mr. Tarun. No headaches for you. No headaches for you. That's the hope. And now that we're audible, let's begin. Let's begin the show that we deserve. The show that we deserve. We deserve it, right? We deserve it. You know what? Somebody told me that they were actually using Thinker's frequency for the MBA preparation. And I'm like, that's nice. That's nice. That's cool. That's very nice to listen to. So, I've got a comment. Deep sleep, healthy and also wealthy, says Mr. Nishant Aluwalia. Hi, good morning, Mr. Nishant. You got a beautiful first name. And let's begin. Bum 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 bum. It's always so funny. Good morning, everybody. Welcome to Thinker's Frequency. We're having such a good time. This is the peak of human civilization. We are working so hard, doing such good work for ourselves, our parents, our kids, our siblings, our husbands, our wives, our friends, everybody. Well, not other people's husbands and wives, I hope. And just when we thought things couldn't get any better, like they couldn't possibly get any better, well, they just did. Call it divine intervention, folks, but things just got a whole lot better. Now we have Thinker's Frequency, our daily mental workout, our daily dose of insights and analysis which don't lead to paralysis right before we punch in. So let's continue with our journey of reading between the lines things that are especially interesting and important in the world of finance and business. Let's go. Oh, but before we go, we gotta follow a tradition, right? You know the tradition. You know the sweet and sacred tradition of the simultaneous sip. We'll all sip something together and it'll bring us good luck. And all you need for the simultaneous sip is a cup or mug or glass or tank, a chalice or stein, a canteen jug or flask, or a vessel of any kind. Pour it with your favorite liquid. Today I'm having hot water with some black pepper in it. Very good for me. I love it. And here we go. Oh, it's beautiful. It's sublime. Let's do it again. Beautiful. You know what the simultaneous sip says, right? You know what the simultaneous sip says, don't you? It says that you're not alone. It says that we're in this together. And that's such a nice thing to say. Some comments from Mr. Tarun. Let's try matcha, says Mr. Chandrasekhar. Yeah, you can have matcha while I have hot water with black pepper in it. Mr. Tarun, oh, I am also doing my MBA. Oh, wow. So this is a first, or actually second, that thinkers frequency is being used by aspirants of MBA and MBA students as a fun exercise in the morning. That's nice. That's very very encouraging. Uh, and I hope the overthinking gets stopped, Mr. Tarun. Think too much, which leads to this. About overthinking, a book that really changed my life was Acid for the Children. Now, Acid for the Children, and also a movie called Match Point. Acid for the Children is the autobiography of Flea, the bassist of Red Hot Chili Peppers. If you've heard Red Hot Chili Peppers, it's an iconic, legendary band working for 40 years now. Nobody comes close to Red Hot Chili Peppers. So, in Acid for the Children, Flea really didn't teach us anything. He didn't try to preach the right way to live, this is how you should do it. He did nothing of that. But what he ended up doing was sharing how he lived his life. And that that changed my perspective a lot. That gave me a very relationship oriented perspective to life, right? He lived in the moment. When he was in his 20s, he was like literally sharing needles, heroin, he was a drug addict. He was living on the edge, literally. And then his bandmate died. Reason that he didn't die is just extraordinary, because you can get all sorts of diseases when you're sharing needles for heroin. But somehow he didn't die. When he survived, and the essence of his life, which came out in the book, was all he cared about was his relationships. His relationships with Anthony, the vocalist of Red Hot Chili Pepper, the John Frusciante, the guitarist, Chad Smith, the drummer. He's all about relationships. You know, nothing comes close to relationships as far as Flea is considered. And when they were giving their speech at Rock and Roll Hall of Fame, when they got inducted in Rock and Roll Hall of Fame, that's what they said. Anthony said that I was in a very very difficult space. I was a drug addict. I was living at a motel above the pizza parlor, and Flea came to me and he said, "Man, Anthony, I can't do it anymore with you. I'll have to quit. I can't take care of you anymore. I'm sorry." And uh, uh, but Anthony said, "But hey, Flea, I was gonna be the James Brown in the 80s." Because he was still high when Flea was coming to do his teary-eyed farewell to Anthony. He was still high, right? And Flea looked at him and said, "Oh man, you were, weren't you?" "But Flea, I was gonna be the James Brown in the 80s." And Flea says, "Yeah, you weren't. Weren't you?" So they stuck together. And the reason Red Hot Chili Peppers is a great band, uh, perhaps one of the greatest of all time, isn't because Flea is a great bassist, or Chad Smith is a great drummer, or that John Frusciante is a great guitarist, or that Anthony Kiedis is a great vocalist. It's not the reason why Red Hot Chili Peppers is great. You know, the Red Hot Chili Peppers is great because these four friends could stay friends and do shit together. You know, that's what made Red Hot Chili Peppers so great. That's what I learned. And when you think about life in terms of relationships, everything gets sorted, right? Like, it becomes easier. So yeah, that's Mr. Ashish Khetan. Some re-overthink. I have a different take. I do overthink, and I feel that it's me. That allows me to get down the rabbit hole on topics the world around me might not be willing to. Mr. Ashish Khetan. That's a wonderful thought, but that's called passion. So that's passion, and it's nice. Uh, Mr. Tarun says, maybe you should someday host a session of great books. Would really love it. We do that. We share books. Mr. Ketan, you're right. My overthinking is related to what I'm doing. The bad thing happens, sometimes it happens. Yeah, they're forever telling, why do you overthink? My response is, perhaps I think you guys do not underthink. So, guys, if you're a thinker, be in allowance. That's not a bad thought at all. It's interesting. So let's move forward. Hope the overthinking is on the passion side and not the stress side. And another great important point that is related to the overthinking scenario is a movie by Woody Allen sir, and it's called Match Point. And in Match Point, he begins saying the movie begins with a shot of a ball hovering up the tennis net. Okay, so the ball is going from left to right, from right to left, as it goes in tennis, right? And the shot is of the tennis net, and the voiceover comes. The man who said, "I'd rather be lucky than good," saw deeply into life. People are often afraid to admit how great a part of life is dependent on luck. Like in a tennis match, uh, in a split second, sometimes the ball hits the net and goes forwards, and you win, and sometimes it doesn't, and you lose. And that's how Match Point begins. I screwed up the dialogue a little, but it basically gives you a perspective that you're not too much in control. The illusion of control is a big problem. Let's move on. Let's begin. Tata Motors is looking at buying Iveco, consumer vehicles business, commercial vehicles business from Italian Agnelli family. It's a $4.5 billion deal, and it's perhaps the biggest deal by Tata. Right, so they bought JLR for $2.3 billion in 2008. JLR is Jaguar Land Rover. Now they are looking at they are literally buying, you know, Ivecos. So this is the greatest deal by Tata uh, after Chorus, but a huge deal in the automotive sector, perhaps the biggest. So a lot of realignment is happening on Tata. Viewers of Thinkers Frequency would remember we talked about how Tata Group is heavily reliant on TCS, right? TCS is like Google search for the alphabet that is Tata Group, right? And whatever happens to TCS and whatever the market change brings for the company, Tata Group will be seriously looking at reorienting itself now because of a lot of TCS problems. Might not just be in control, right? You can't control anything, everything. So perhaps that perspective is being sped up as Tata Group reorients itself into the bigger automotive play. It already has JLR, which brings most of Tata Motors, you know, earnings, and now Iveco's commercial vehicle business might just be looking at something, right? Uh, by the way, Lenskart is offerings is set now 8,000 crore IPO. The company is looking at a valuation of $8 to $9 billion, down from $10 billion which was announced. Now, is it possible? Is it possible that they reduced the valuation ask because of my article, by my viral article on Lenskart's valuation, IPO valuation? Because I wrote an article saying that their $10 billion IPO is a pretty. Lenskart is just another Paytm, right? And that article went viral. It had like 500,000 views, and all people, all sorts of people, from RBI chief general manager to CFOs of Adani Natural Gas and so on and so forth, they read and they added me, like private equity guys, all sorts of people liked it, and they said that we agree the company is deeply, deeply overvalued. The $10 billion valuation doesn't make any sense. So now the company is looking at $8 to $9 billion valuation. Now my question is, did I save $2 billion of retail investors? Well, that will be too aggrandizing. I won't go that far. I don't think I have that pull right now. But I still think that the company is deeply, deeply overvalued, and these people ought to be more ashamed of themselves. To be looking at an $8 to $9 billion valuation at a 300 crore. So their profits came out, apparently, not the official report, but they say that they've made a 297 crore profit. Some one-time, exceptional gains included, and so on and so forth. So my assumption was 200 crore, which is right because of some financial gains that are not to be counted in operating revenue. But 297, let's say 297 crore of you know earning, and let's say $10 billion valuation, you're still looking at a PE, price to earnings, of 280. 280. So for just for perspective, it's crazy. It's just next level. It's Titan has a revenue multiple of 5 right now, when that is a 10x company, $5 billion in revenues, 500 million in net, and they have a revenue multiple of uh, 5, when their growth is actually uh, 37% as compared to Lenskart's 11%, 17%. So Lenskart's growth has slowed down, but their revenue multiple is up, and they, even at an $8 billion valuation, people who invest in Lenskart's IPO are 100% assured of losing, let's say, almost half of their money, right? So the ideal valuation should be around 3.5 to $5 billion, and that would have been fine because Lenskart still would have been a good bet for the investors because the company has raised $1.8 billion as of now, so it wouldn't have been problem. But they are looking at a lot of bad decisions, you know. So it's greed playing out, and these guys need to be more ashamed of themselves. Now, my question is, uh, there was some missing degree with one of the director of Lenskart. I don't get that, Mr. Tiwari. Shark Tank India fame, says Mr. Tarun. If Lenskart would have been going on Shark Tank, they would have gotten a $1 billion valuation. Because that's what companies get on Shark Tank, right? No matter whatever they're making, they get terrible valuation multiples, very very bad valuation multiples. Even though they are like at a very embryonic stage, so they get very shitty revenue multiples. If Lenskart went to Shark Tank, it would get a $1 billion valuation. But in the public market, it's asking for an $8 to $9 billion valuation, less from 10, but still very high. So let's now, my question is, my honest thought is, how are these guys different from, let's say, the Wall Street guys who sold bad securities right before 2008? Now those people knew that those CDOs were bad, and they essentially started selling those CDOs to unsuspecting customers, knowing that they were worth zero, so they could have a net short position themselves, right? How is this any different? I mean, you know that the value of your stock isn't that high, but just because you can sell it, you will sell it at that price, and everybody will lose money, right? Sooner or later. So how are these guys different from that, and why are they not more ashamed of themselves, is a very good question. Moving on, but I'm happy that they reduced the ask to $8 to $9 billion from 10. And I'm very very tempted to believe delusionally that I have something to do with it. Of course I don't. Moving on, IMF lifts India's FY26 growth outlook to 6.4%. It was earlier 6.3%. Now 6.2, 6.3. They've made it go up to 6.4%. But this growth rate, or that projection, let's say, doesn't factor in a lot of problems that we are facing, which we are going to discuss. So the banking sector is facing a lot of problems, and not just the banking sector, the non-banking financial sector is also facing a lot of stress. And this stress is majorly in the unsecured loans business, and in the, let's say, bottom of the pyramid or middle of the pyramid business. And it's becoming a bit of a problem for these guys because they are not seeing light at the end of the tunnel. There are a lot of payment issues, there are a lot of provisioning happening, there's a lot of stress as far as business loans are considered. Now these people think that why is this happening? Why is consumption not really picking up? So we'll discuss more on that. But this particular growth rate, even though IMF is looking at a good projection, they've improved their stance. This optimism needs to be now looked at very very carefully. We'll discuss that a bit later. PNG PNG is recruiting an Indian as the head, as the CEO. PNG is the world's largest company, consumer goods FMCG company. Now they are having an Indian as the chief, which is nice. By the way, this person, Mr. Shailesh Jeju Rikar, I'm sorry about that. Mr. Shailesh Jeju Rikar is is going to be the chief, and his brother is Mr. Rajesh Jeju Rikar, who is the CEO of Mahindra Auto Parts. So both the brothers have really killed it in the game, and that's pretty awesome to know. Speaking of Indian economy, we know which sectors are hurt, and we know which sectors are doing good, right? Viewers of Thinkers Frequency, remember that we talked about how banking is in trouble, how IT is in trouble, how the consumption sector is in trouble, how the electronics and cooling sector is in trouble. Ice creams didn't sell because rains came early. ACs didn't sell, fans didn't sell because rains came early. Rural consumption, urban consumption is a bit of a problem. But which sector has been doing well? So, what is the opposite of private capex? We discussed this. Viewers of Thinkers Frequency would remember. When private capex didn't hold the fort or didn't do what was necessary, the government capex has been at it, right, with full swing. And where does government capex most of it go? It goes into construction, right? Mostly. And that has reflected in L&T's earnings. L&T says net profit up 30%, orders at record high. So L&T is the perhaps India's largest EPC company, engineering, procurement, and construction company, and their orders are at record high, and their net profits are up 30%. That means the government capex job is intact. Now this shouldn't have been any surprise for anybody, especially the viewers of Thinkers Frequency, because we knew that while private capex wasn't really kicking it for India, and that was a big thorn up India's butt, the government capex had been doing it, right? So that particular bit is sorted. L&T's earnings are good, and that's what makes this particular reading of the situation very complicated, right? When you're thinking about India, forget about the macroeconomics, forget about the tariffs, forget about whatever. The internal situation of India, how do you read it, right? How do you read it? Then Adani's construction and cement arm will also have good numbers. Mr. Tarun, yeah, sure. Adani is already doing good numbers, right? Adani is killing it. The group, I'm sure, I mean, is killing it, right? They have pretty solid earnings because all of the business is concentrated towards this particular thing, right? The ports, the airports, the construction play. They have like a 1 lakh crore project which is being run for the Mumbai slum rehabilitation, right? So yeah, if you're looking at that particular bit which is dependent on government capex, it has done well, and it will do well right now. Moving on. So yeah, I was saying I lost my train of thought because of the comment. I said that it's very difficult to judge what India is up to at this moment of time, because at one place you have all these private investments happening. I'm sorry, all these government investments happening, all the construction happening, all the road, the flyovers and metros and bridges, and these trains and so on and so forth, all the airports. But at the other end, you're looking at a very strained consumer sentiment as far as buying capacity is considered. Just because rains came early, ACs didn't sell, all the electronics companies went under the limbo. Ice creams didn't sell, beverage companies had poor numbers, and so on and so forth. So a lot of problems existing and a lot of small businesses not being able to pay back their loans. That means that there must be some real stress as far as the whole activity is considered, right? When a small business who's taken loan, not the mudra loan I'm talking about the SMB loans which these banks and finance corporations are issuing. If they are seeing stresses, that means it means something clearly isn't working out in the country's favor, and you've got to figure it out, right? When I say you, I've got, I don't mean that's too much responsibility. I mean, the country has to figure it out. Yeah, so just as we talked, viewers of Thinkers Frequency would remember. Early rains pour cold water on FMCG companies' summer business, right? Ice creams, beverages, water, none of these things could sell as much. Now, these are obviously seasonal, rain dependent, and so on and so forth. But if this it becomes such a big problem that businesses start defaulting on their loans, and banks start getting stressed, what does it say, right? Speaking of the stress, we talked about how the real estate industry suffered. The stocks of the real estate industry suffered when IT layoff news came, right? You know what? Which other industry has started looking weak all of a sudden because of that changing sentiment? Can you guess? Just think about it. IT guys uh, getting fired, living in tier 1 places, spending on restaurants, right? So retailers and restaurants are looking at a stress because of these current firings. So they say that this is a big trouble for us because that's our clientele. Now that's another very scary news, because you know what, retail sector and the restaurant sector, they don't make a lot of money because it's a very very difficult place to make money. Restaurants, very difficult, but they employ a lot of people, and all of these people that they employ, they are very very bottom of the pyramid kind of people as far as earnings are considered, right? Now if IT sector continues its layoff spree, right, or accelerates it, looking at TCS, what happens as far as cascading effects are considered, and these are one of those cascading effects. So you saw the real estate market going down in stocks like 6 to 8%, they went down, and now you're looking at restaurants getting affected, right? Or restaurant industry saying that they are getting affected. So that's something to think about. Speaking of real estate industry, the Naridco, essentially, this is an amalgamation and association essentially of the real estate players. They have conducted a study that says reality sentiment building back on macro muscle. Now, we read between the lines, right? We don't read what's written on the letter, right? On the page. We go beyond the line. Now, do you think that this is PR? This particular study, overall sentiment score rose to 56 from 54, ending a 4 quarter decline. Future sentiment score jumped 61 from 56, showing medium term optimism. Do you consider this as a real optimism, or show of optimism? Or do you think this is PR? What do you think? 70% expect residential launches to remain steady or increase. Source Knight Frank and Naridco study. Now, Naridco is essentially Real Estate Developers Cooperative. Essentially, I'll just tell you the full form of Naridco. Naridco full form: National Real Estate Development Council. So, do you think that this is actual real, show of strength or real optimism, or is it just painting the numbers to look good when the industry is clearly not that green, at least in the short and medium term? What do you think it is? Uh, it could be a mixed bag, right? Speaking of retailers, Decathlon is saying that we are struggling because of changing consumer habits, shopper habits. Our growth has went down. So Decathlon does some 4,000 crores in revenue, and posted a profit of 200 crores at a 4,000 crore revenue. And they say that it's basically the FY25 results might not be looking that good. Now, Decathlon is amongst the companies that had raised the sourcing from India for its foreign supplies as well. So it was looking at India as a sourcing hub as well. But if Indian market looks a little bleak, it might just be a spell of trouble, right? But again, a lot of people think that Decathlon's let's say numbers are reflective of the overall market, but that shouldn't be the case, right? Because sometimes companies' problems are their own, not the sector's problem. Like we discussed, like HUL's problem, people consider it as a proxy of the Indian consumption story. But is HUL problem really the Indian sentiment problem, the Indian market problem, or is it HUL's own? In this case, I'm pretty sure it's Decathlon's own. In the middle of all of this, in the middle of everything, the consumer battles and everything, Reliance is looking at buying Shunya. It's a very old brand. It's basically Baidyanath Group, which is a 1917 group. It's like more than 100-year-old company. Shunya is their healthy drink, a natural ingredient drink, and they are buying. So Reliance consumer is looking at not stopping and not considering any macro signals or stress signals at the moment. They consider these short term because it has the financial wherewithal to sail through whatever happens, right? So Reliance is just looking at going all in. Zero sugar beverages play. Very interestingly, Indian medical devices business, has yet another PE deal. So viewers of Thinkers Frequency would remember how we talked about Adia, the Abu Dhabi investment fund. They recently bought something, right? What did they buy? Yeah, Adia took a minority stake in Micro Life Sciences, Merrill, for $200 million. We talked about this. Viewers of Thinkers Frequency would remember. Merrill, the company started by some Gujarati entrepreneurs who had sold their initial companies to German companies and now had raised like 200 million for their new startup at a $6 billion valuation. And nobody knows their name. I don't know their name. I don't remember their name. That was one deal. Then KKR has been actively investing, acquired Healthium MedTech, Healthium MedTech. Then KKR TPG also showed interest in Sahanand Medical Technologies. So a lot of medical device companies, now Sensacor is getting, a PE deal at 2.6 thousand crore valuation, they are currently denying it, but it's a clear trend that Indian medical establishment, medical uh, device manufacturing establishment is really, really kicking up. A lot of PE action, a lot of buyouts, a lot of minority stake investments by PE. There's a lot of meat there. FY25 revenue at 400 crore and some EBITDA at 100 crore, I guess. So a healthy business, definitely a very healthy business. Yeah, 80 to 100 crore EBITDA, which is nice. India imports 80 to 85% of medical devices. Now, viewers of Thinkers Frequency would remember how this is also something that we have already discussed, right? That India's imports of medical devices are going to go low. Why? Because it's a strategic play, right? India will be looking at Atmanirbharta as far as medical devices manufacturing is considered. And a lot of deals in this segment are basically indicative of that. So, in another story, 2 days to go, no clarity over US tariffs, trade pacts on. US team is going to come to India on August 25th to move forward with the negotiations. Trump says India could get a tariff of 20 to 25%. He says that India essentially taxes tariffs US more than any country in the world, and it might just US might just be looking at tariffing India to a very very high degree. Is that does that news scare you? Well, it should. It should, because Indian tariff scenario needs to be very good for India to be able to attract a lot of investment. If India gets an unfavorable tariff deal, suddenly India will become deeply unattractive to everybody, right? Because right now Vietnam, Indonesia, Indonesia got like a 19% deal. Vietnam is very high. They are essentially at 46%. China is high. But if Taiwan is at 15 or 19%, right? We remember. If India doesn't get a very, very favorable deal from US, it's going to be very difficult for Indians to get foreign money to set up a lot of things. Uh, no plan to increase borrowing targets, says government. Government says we're not going to increase the borrowing target because we are well sorted. We're going to invest, but we're not going to increase the borrowings. Moving on. Mm-hmm, mm-hmm. Okay. Yeah, we're not missing out anything. We don't miss out anything. That's why we have started to become so good as far as seeing things are considered. In these 65 days, we've really, really moved forward, right? In this particular game. And it's only gonna get better. Speaking of moving forward in the game, did you see what happened to the Aether stock ever since we talked about it? Did you see, guys? Okay. EV companies look to drive the wage boom. A recent report says that EV companies are essentially the best at giving increments at this stage of you know you know the Indian economy. EV companies are looking, and the best number of hikes are in sales and marketing, about 10% increment. Now that doesn't surprise us, right? When the economy is dealing with a consumption problem, who will be paid more? What kind of people will be paid more with incentives and so on and so forth, right? The sales guys, the marketing guys, and that makes sense. So not surprised at all at this particular research by Team Lease. Team Lease publishes a lot of these researchers because they sit on a lot of data as far as hirings are considered. For people who don't know, Team Lease is perhaps India's largest homegrown staffing solutions company. And with that staffing solutions company, what they do is a lot of publishing of reports, because staffing solutions is essentially a very very low margin business. They have like a staffing has a net margin of 1%, like 1%. So it's nothing, right? And they show revenues of 6,500 crores and so on and so forth. We were recently talking to the founder of Genius Consultants, which is a 2,000 crore company by revenues, and their net profit was like 20 crores. So this is a business model of Team Lease, and it publishes a lot of these trend reports as far as employment game is considered. So things people do, right, to diversify. Speaking of things people do, DTH companies are looking at may get a license fee relief. So viewers of Thinkers Frequency would remember, we've discussed this so many times, that DTH companies, that is direct to home, is a very very troubled space. Very troubled, very, not just very, very. Why? Because TV subscriptions are falling off the cliff, right? uh, uh, you remember we talked about this. 2015 150 million, 2025 100 million. Out of that, pay TV is at 75 million. Let me just tell you the exact numbers. 70 million. 70 million in 2020 to 56 million in 2025. They've lost like 13 million people. uh, you know 13 million, 13 million, that's 1.3 crore subscriptions they've lost in just 5 years from 70 million to 58 million, 56 million. So they are in trouble. And right now, DTH guys pay an average gross revenue percentage, a license fee of 8% to government. 8%. Now they say that we're not gonna survive, sir. I mean, we're just gonna die. You want us to die, you know? If we die, a lot of bad things are gonna happen. A lot of bad things are gonna happen to cable television, to television industry in general, right? So we need to survive. So what the government is due deliberating on is reducing that AGR to 3%, the license fee to 3% of AGR. AGR is adjusted gross revenue. So a percentage of that revenue has to be paid in license fee, right? That's for telecom, that's for DTH. Right now that fee is 8%. What DTH guys say is that we need to come down to 3%, and from FY27 it should be 0, because we are going to die, right? And in the midst of all of this, what the government ended up doing was they sent them a retrospective bill, sort of a penalty of thousands of crores. So the government said, hey, yeah, we hear you that you're dying and you're really struggling, but here's a bill that you forgot to pay. That's what the government did with these guys. So that case is also on. But at the moment, revenues have dipped 5% year on year to 10,000 crores. They're like, TV is really, really going down, man. So TV is going down, which brings broadcasters' revenues down, the TV industry's revenue down. On the internet, you have Google giving AI, summaries of news articles. So on the print side of things, on the digital print side of things, you have your revenues going down because Google and ChatGPT are basically summarizing the news outlets. It's a very bad time for the media play. And in the midst of all of this, I have investors coming to me saying that you should start something like a Ken or the Morning Context and we'll fund you. And I'm like, are you guys eating grass? Or are you guys smoking it? What is it? What is it? Are you guys eating grass or smoking it? In this day and age, where media companies are getting screwed from left, right, and center, you want me to start a media company? Man, you're dumb. Moving on. IT begins a crackdown as jewelers strike gold with an accounting trick. Now, this is lovely. This is interesting. This is very, very fun to read. So what jewelers' accounting principle is that it's supposed to be first in, first out. FIFO. Okay? What FIFO means? Does anybody know what FIFO means in jewelers' terms? No problem, I'll explain. So, let's say you bought gold, okay, at X amount of money, right, a year ago. So what you ought to be doing is you've got to sell that gold first, right? That's called FIFO. First in, first out. You're going to sell that gold. You bought gold at one price, at the previous price. You sell that gold and that's it. Then the gold prices increase, Let's say now the gold prices have increased. So you've got to sell the gold which you bought later. That's how you're supposed to do accounting as far as jewelers are considered. That's the FIFO model, right? Weighted average FIFO. Now, what these guys started doing was LIFO. Last in, first out. What they started doing was they started buying gold. Now they're buying gold. Gold prices are up. But they were selling gold, the previous one, the one which was bought like way back, right? So that way they were essentially compressing their profit margins on paper, right? And this has been going on for 5 to 6 years, says the IT. I love it. I absolutely love it. This is beautiful. This is brilliant. But IT guys, income tax guys don't love it. And now they've begun cracking down on jewelers for this particular accounting trick. What do you think about this? Isn't it fun, right? Isn't it like absolutely amazing? Like people always find ways, says Mr. Tarun. Yes. So what did Scott Adams sir say about this, right? We talked about this. We viewers of Thinkers Frequency would remember. We've talked about this very, very deeply. And we said, where does fraud happen? Right? Where does fraud happen? Fraud happens when there are a lot of people, okay? There's a lot of money and there's a lot of time to fiddle with. A lot of people at play, a lot of money, a lot of time. Now you can't control time, because time flows, right? Samay. You can't control the can't control the money. You can't take out money from the equation because everything crumbles, right? Money is what makes the world go round. The only thing you can decrease is the number of people at play, right? That's the only way you can reduce fraud, because this is just this is not even fraud. I'd say it's a pretty ingenious way of doing it, and they did it. So the law says only FIFO, or weighted average cost allowed. LIFO violates the tax, and these guys have been doing it for like 5-6 years now. Electronics makers shop for companies to tap Western clients. Contract manufacturers are striking global deals to access new tech and clients in the West, aiming to capitalize on shifting supply chains. Like, is it surprising for anybody? Like, not viewers of Thinkers Frequency, right? We know that electronics companies are looking at Western clients. In fact, they've already been looking at Western clients because Indian market is not really doing it for them, right? So a lot of people, even the Indian guys, they are essentially looking at more exports, more tie-ups, more joint ventures to be able to go outside. And it's not just electronics makers. Even Hero is looking at outside markets, right? We discussed this, Hero Motorcorps, because their bikes are not selling as much in India. So they're looking at new markets, international markets, and they have to. That's called risk management. Moving on. Private banks hit a few growth bumps in Q1 and may face more. Now, viewers of Thinkers Frequency must have benefited from this, because we said this even before it was a news item. We saw this coming. India's top 9 private sector banks posted a combined net profit of 43,000 crores, marking a 2.7 growth percent, reflecting circumspect economic growth, tepid credit demand. Right? The combined net profits of these 9 lenders had climbed 19% year on year before in the first quarter. So we've seen this coming. We've talked about the net interest margins. We've talked about all these numbers, and those numbers are finally coming to light. And banking sector has faced a serious amount of stress in this particular quarter, and it might just happen for a little more time, right? That's what we talked about, and that's exactly what these analysts are saying, like almost 2 months later. The stress is more in the middle income segment and also at the bottom of the pyramid, right? Now, this is what I was talking about. Screw IMF's projection for Indian GDP growth, right? That's okay. That's fine. That's good. What does this particular news bit suggest? Analysts said the earnings of financial companies reflect stress across the board, especially at the less resourced end of the consumer spectrum. The sum and substance is that the economy is grappling with lower growth. There are job creation and employment issues. There is stress in manufacturing as financials are seeing non-performing loans. Now, what does this say? Right? This exactly says what we've been talking about, that even though the numbers look good, right? The net job additions, according to this guy, jobs are a problem, but net job additions are up. We discussed this, right? The EP of subscriptions were up, net job additions were up, all the surveys were up, those things were up, right? However, the loans are not being paid back. The savings are not as much. The consumption is not growing, right? The stress is more in the middle income segment. We talked about this, and so on and so forth. So this is the reading of the banking industry at the moment. It's a little bit of a dampener, the spirit dampener. And we are not alone. China is facing just the same troubles. They are facing real slowdown as far as their economy is considered. They build their economy on the back of great investments in real estate, but they're not panning out, as much as they would have liked to. So that's becoming a bit of an issue. India is obviously a different market, but similar stress. Now look at this. That was for the banks, right? So in the Indian economy or in any economy, lending happens through banks or through NBFCs, right? So NBFCs under stress can get festival bank. Analysts point to a signs of worry in some sectors that even top players are feeling the strain, but say all is not lost. So let's just figure out the number. We are seeing pockets of stress emerging in sectors like microfinance, personal loans, cards, and also micro SME loans. It is still not led by macro indicators. We expect this stress to continue, so that's okay. We've talked about this. Now this guy says the challenges are being felt even by top NBFCs, which helped millions of Indians step on the consumption ladder for the first time over the past decade. This is very important. The challenges are being felt by even the top NBFCs such as Bajaj Finance, which helped millions of Indians step onto the consumption ladder for the first time. In the post results, Bajaj MD said that 13 of the 17 industries the company tracks in the MSME sectors are showing signs of stress. 13 out of 17 industries that this particular thing tracks, they are showing signs of slowdown, while three others are showing signs of contraction. Contraction is like negative growth, slowdown is slowing growth. So 16 out of 17 are showing signs of contraction or slowdown. Now, what does this say? This virtually a perfect storm in a way, our MSME portfolio and so on and so forth. So this is a bit of an issue. Perhaps this is why they reduce the lending rates. This is why they are trying to find ways to circumvent the consumption issue. So let's see how that plans out. But as of now, all it takes are a few bad earnings calls and the entire market sentiment shifts, right? Just like 10 days ago, we were like talking about, oh, this market is great, this is great, we're doing really well, and so on and so forth. And then we talked about, oh, banking results are going to be bad, IT results are going to be bad. And just as they became bad, every bit of the sentiment changed, right? This is exactly what happens all the time, every time. The history repeats. Okay, building a robust pipeline of Indian projects to fund, says AIIB, the industrial bank, where India is the second largest player with 4%, and China is at 26%. So it's an international play. Asian Paint CEO sees steady urban demand but flags tech layoffs. So the paint companies are also talking about how the tech layoffs may impact them. you know, I think the government will probably try to help these guys a lot. A lot is at stake. Now, I wrote that bad news for Indian IT is bad news for India. And somebody said, no, that's not true. Now these companies will be forced to innovate and, so on and so forth. And I'm like, screw innovation, man. Innovation is okay. It's great. They should have innovated. Whatever is done is done. But what about the job losses, right? Who's going to absorb those jobs? That is the big question. So Asian Paints CEO is also commenting on that particular equation. But you know what? Whenever a company is doing bad on its own, it starts pointing out to the sectoral problems, right? Generally, this is what happens. Now, Asian Paints is going through trouble because of what? Viewers of Thinkers Frequency would remember. Birla's entry into the paint sector. Not just Birla's entry, JSW's entry in the paint sector. JSW bought that Japanese company, the Dulux brand, and Birla is entering the paint segment full on, which has led to a lot of crash as far as Asian Paint stock is considered and Asian Paint's prospects are considered. So Asian Paints and Berger Paints were the leaders, have been the leaders, are still the leaders in the Indian paint market, and Asian Paints has lost a lot, ever since these people came in, the JSW and the Birla guys. So a lot of times what companies try to do is that they blame the market for their problems. So take everything with a pinch of salt. Science is considered it means, right? Speaking of creating jobs, uh, the government is asking, and the GCC companies are considering using a hub plus one strategy. What that means is that they're talking about creating one hub, a big hub, and then opening up their offices in different areas. You know, they're looking at opening up their offices in tier 2 towns. Now, viewers of Thinkers Frequency would know that we talked a lot about this, and this is finally happening. It was an idea before, but now it's real. It's real. People are actually looking at going tier 2 because it saves money. Simple reason is that the real estate costs have really spiraled up. You know, it becomes very difficult for companies to set up offices in Delhi and Mumbai and Bangalore and Hyderabad and Chennai when Vadodara's real estate is so cheap, right? So tier 2, and that also helps us escape the Malthusian trap, right? Now viewers of Thinkers Frequency would remember we talked about the Malthusian trap. Once again, a quick revision, very important revision. Malthusian trap says that an innovation or a technology innovation, the introduction of it, doesn't lead to uh, a rise in quality of life as imagined. Because and rise of GCCs means fall of IT. Bad news for IT, but maybe some of those people find jobs as far as the GCC play is considered. So let's hope that that happens. Uh, you know, Zepto has closed in on a secondary deal at a $6 billion valuation. But look at the size of the investment. Now this is how you read PR. Okay, just note the size of the investment. 0.0146% stake. Now somebody called LCID Investments, they are putting in what amount of money? 7.5 crores. Less than $1 million in Zepto as a secondary deal to bring its valuation up to $6 billion. What is it? It's PR. It's hogwash, right? 7.5 crores. It's a joke, right? For Zepto. Like Zepto has raised billions of dollars, more than $1 billion. And the news item is that Mumbai-based LCID to invest 7.5 CR, raising its stake. In effectively a $5 billion company, a 7.5 crore investment is being touted as something. Now Zepto's numbers have come FY25, and at a revenue of 11,000 crores, they've made a loss of 1,200 crores. Now I had written an article on Zepto, a very viral analysis, and in that analysis I had said, with calculation, right? This analysis was done like 2 years ago, I guess. It had said that even at a revenue of 10,000 crores, the company will be wildly unprofitable. Now, was I ahead? Of course, I was ahead, right? And that's like super cool, right? And all of these people were talking about, and I'm like 10,000 crores. At 10,000 crores, I did the math. I calculated the average order value, the payments that will go in delivery, the gross margins, and so on and so forth. And I said, at this rate, the company will be wildly unprofitable at 10,000 crores. And it is at an 11,000 crore revenue, and it's made a loss of 1,200 crores. So, now there's something called infinite monkey, right? Infinite monkey theorem. You know what the infinite monkey theorem says? It says that if you give monkey a keyboard, right, and if you give him infinite time, someday the monkey will end up writing the Hamlet, like the entire Hamlet. Hamlet is a play by Shakespeare, wildly adapted on screen, even in India. Heather is a Hamlet adaptation. Lion King is Hamlet in the jungle. Dune, it's Hamlet in outer space, and so on and so forth. So Hamlet is one of the most widely appreciated plays and has been on for 500 years. So the infinite monkey theorem says that you keep giving the monkey time, infinite time, and someday he ends up writing the Hamlet. Now, is it true for infinite money? Because money is time, right? Time is money, money is time. So if you give somebody infinite money, would that person not figure out a way to make a business which, ends up saving some money as it sells and spends? Of course. Someday every hyper funded company will figure out a way to make some tiny amount of money. But the thing has to be judged in a larger way, right? And as far as impact is considered of quick commerce on the retail, and as far as the unit economics of the business is considered, it's just sad even now. Now, people said Zomato made like a 30 crore profit or something, but actually most of that profit had come from financial instruments, right? And actual Grofers business, they also lost a lot of money. Now 1200 crores is how much money? uh, 800 crores is 100 million, so 150 million. These people lost 150 million, which is exactly what I said. As far as the burn is considered, 150 million is about 10 to 12 million a month, right? What did I tell you? What did I tell you? Didn't I tell you? I feel like an African lady in hindsight. What happened exactly like I told you? And when did I say this would happen? A long time ago. And so on and so forth. GCC is taking to hub plus one. Performance of firms responsible for lower PLI dispersal, says MeitY, Ministry of Electronics and Technology. They say we've not been able to spend the PLI that we had marked. They've returned like 1,500 crores from the PLI scheme. So they had planned a PLI scheme and they've not been able to spend it. They say the companies couldn't use it. PLI is production linked incentives. These companies didn't produce. What do we do? So that was that. NASSCOM warns of right sizing. Now, figure out right sizing, not downsizing, right sizing. What is it? It's wordplay, right? NASSCOM warns of right sizing as Indian IT sector faces heat. Calls for workforce skilling as AI automation becomes central to operations. Well, NASSCOM is like 60 days late, right? NASSCOM should watch 30 Thinkers Frequency. What do you think? Now, we've talked a lot about the bad things that happen if people get laid off from IT. Can you figure out which industry will actually boom with IT's layoffs? Now, we figured out, let's say alcohol industry is going to go down, the restaurant industry is going to go down, retail industry faces problems, real estate faces problems. But which industry goes up because of all the layoffs? What do you think? Can you think? Can you think of something? I'll take a sip. Come on, folks. Think. Think. What do you think? Tech, says Mr. Tarun. Oh no. Can anybody say something else? R&D. R&D in what? Which sector R&D? Which sector R&D, Mr. Tarun? Let's give you 5 seconds more. The way to look at it is pharma. Pharma sector is gonna go up. Ronak says yes, Mr. Ronak. Pharma sector will be looking at a big, fillip, right? Because of a lot of this stress in so many sectors, the cascading effects of it, they will have problems as far as like literal physical, mental problems. All these people. So now physical mental problem leads to two businesses, right? One is the mental health business, the counseling psychiatry business, but it's still a discretionary spend for people. The mindset is that you don't need to spend that money, that is extra money, rich people, go to therapy, right? So that might not just yield for that industry right away in India, but pharma goes to that place, right? Do you agree with me? These A lot of the stress will manifest into an opportunity for the pharma folks and also for the education folks. So as we talked about, these mid-market, mid-management people were looking at MBA and so on and so forth. A lot of education companies might just be looking at a real fillip, because all these people will try to fight back, right? And what can they do to fight back? They'll try to upskill themselves. You know, uh, that that is an opportunity. So education and health, they will be looking at a good fillip. Now, health is sad, as Mr. Tiwari says. It is what it is. Just that I hate when health is combined with business. You're right, and it's absolutely sad, and I wish that nobody faces that kind of a problem. However, uh, education and health are two sectors which just might be looking at a renewed interest, you know. And we've said this now. Now let's see what gets announced, let's say 30 days or 50 days from now on, if we still exist by then, right? And with that, we come to the end of the 66th episode. Oh my god, 66th episode of Thinker's Frequency, our daily mental workout, our daily dose of insights and analysis which don't lead to paralysis. Right before we punch in, it's 9/11. It's 9/11. Nothing to laugh, very sad, but it's 9/11. We're gonna punch in a few minutes. I wish you a beautiful day, personally and professionally. A big thanks to Mr. Tarun, Mr. Chandrasekhar, Mr. Ashish, Mr. Tiwari, Mr. Ronak, and Mr. Nishant. Uh, you know, I had a lot of fun talking. It was beautiful, as it always is. Please take care, and I'll see you tomorrow, same place, same time, hopefully. Bye bye.